Hey, Tex here with you. Thank you very much for joining us on our Fibonacci guide. For more information like this, you can head over to unitytradinggroup.com and see all of the other guides and info that we've got here. So let's get straight into it. If you've read our Fibonacci guide, you would know quite a bit of this already, and this is really just a confirmation of the guide. If you're watching this on YouTube, you can head to unitytradinggroup.com/Fibonacci to read our guide. So you'll know that this is one of my most favorite, my most often used tools in trading by far. You'll see a little bit of information on the screen here as well. We've got our overall downtrend line acting as support and resistance. We've got our levels of supply and demand. And we also, if we double click out of here, have some of our indicators that we use with Fibonacci. So we've got our RSI, we've got our custom steamroller indicator that's only available to members of our inner circle, and then our CCI for spotting divergence. Now, this is really just what we use for our indicators when we use this along with Fibonacci. You yourself might use MACD, you might use other forms of indicators, MAs, for example, but this is what we find works quite well for us, and you can simply just cherry pick the best bits from this if you find any and apply them to your own trading strategy. So what are retracements? Well, retracements are essentially pullbacks. When we're in an uptrend such as this, we're looking for pullback areas where we can look to bloat up or buy if we think that this bullish or this uptrend is going to be sustained. And conversely, in a downtrend, we can look for areas where we might exit the market or indeed put a short on rather than placing a long in an uptrend like this. So we can sort of see at the minute, I'm trading on the daily time frame here. And the most important thing is how do we find our swing low and swing high points? Well, that's pretty easy. We look for the points or candles on the chart that have no candles lower than them on either side. So this is pretty easy. And why wouldn't I use this candle back here? Well, because that was still part of the downtrend at that particular point. We're in a new uptrend. Undoubtedly, we are still in this overall downtrend because we're making lower highs. We've not yet breached this trend line and broken above it. We're still waiting for that. The BTC bulls are waiting for that still, right? The 10th of January, 2020. So we've got this lowest wick, and then we've got this highest wick up here. So in an uptrend, this is where we draw from. In an uptrend, we draw our fibs from our swing low to our swing high to find areas of pullbacks, to find the retracement levels. And in a downtrend, we draw our fibs from our swing high to our swing low, where we can look to close a position or open a short if we are if we're long. So let's have a look here. We can draw it from our swing low to our swing high. Will it line up? Well, it looks like it's been pretty well respected here. Now you can see on the right hand side, these are our fib numbers, and we'll have a look at the settings just here. 0, 38, 61, 1, the extension, the 61, 8, and the 272, 786, 5, and 236. And I have my 61 and my 5 highlighted green because for me, they're major pivot points or major points or areas of interest. And I'll go through the numbers in just a moment. So if you were reading our guide, you would see that really for myself, I consider the sort of the 38, the 50, the 61, to a degree, the 78 and the 23 as major levels. But really, I'm looking at the 38, 50, and 61. Although the 50 isn't an actual fib number, it does hold quite a high level of psychological relevance to traders, because we often find that when things confidently break and close above these 50 fib levels or indeed below, we find that or for myself rather, I find that that's often a good indication of the continuation of the trend, whether it be to the upside or the downside. I find that the 23 levels and the 78, not so much the 78, but more so the 73, I find that things tend to consolidate a little bit between the 23 or around the 23 and the 38 before making a larger move to the up or to the downside. So I place weight on the 23, but when it comes to the 23 fib, I would rely a little bit more on other forms of TA and indeed what my indicators are doing to give me an understanding of where things might be headed. I can't remember whether I said this or not already. We've got our levels of supply and demand on here as well. So the analogy that we use inside UTG and in our guide is that it's like baking a rainbow cake or a cake with layers. Before you overlay your fib tool onto the charts, what you're probably best to do, and you don't have to, but certainly it does help, is draw in your major lines of support and resistance and then overlay your fib tool and grade yourself. How well are the fib lines interacting with what you've drawn, because we do consider our fib lines areas of support and resistance. They act in very much the same way. We can see here the 38.2 acted as quite a substantial level of resistance, and we did have the same sort of resistance to the left here to a degree, and the 78.6 acted as a level of support. So that's why we would draw in our lines of support and resistance, or our lines of supply and demand, which we often do a little bit more because we also trade FX markets. We find that supply and demand is very well respected along with fibs over there too. And we've got our downtrend lines as well. In fact, if you look at this here, you'll sort of see it's pretty well lined up with another level of what would now be a pretty heavy level of resistance before we had this quite savage dump. And just to go back a little step as well with those settings that I was talking about, the 27.2 lines up pretty well with that. And the 61.8 lines up quite well with that anyway, with those wicks, not quite so much down here, but certainly we've respected, or we've touched this area beforehand. Now, using the 27, I certainly don't find it much with the 61.8, but indeed with the 27, and I'll show you in a minute, that I find that when we get a serious break to the upside through this previous level of resistance or this previous swing high, if we can get a strong bullish candle through that and indeed a close above that, I will find at times that the 27.2 is our next level of resistance that I'm going to be looking out for. And conversely, when we're in a downtrend, which I'll show you in a minute, it becomes, if we find that we break heavily through the previous swing low and the 0 point, the 0 fib level, the 27 becomes another area of support that I look for, or an area of consideration that I would certainly be looking for as well. So I also use the fibs. Like I said, I'm on the daily time frame here. I'm a swing trader, so mostly 4 hours and above is where I use the fibs most. I would go and sometimes put it on a 30 or a 15 minute, but very rarely. When I get down to those smaller time frames and I'm scalping or intraday trading on BitMEX, or day trading rather on BitMEX, and looking for short time frame trades, I'll use something like the Ichimoku, which I'll show you now very quickly. On the daily time frame, we might see how these levels are often respected. So we can sort of see here now we've got base and conversion line confluence. We're just about to get a TK cross there. And we can sort of see that occurs around the 38 level as well. If we go to our 2-day, we can see that our baseline is very well lined up with our 50 fib level at the minute, indicating that this could be quite a good level of support. And our swing high matched up quite well with our conversion line there as well. So that's another way when we overlay things on the charts. Sometimes I'll have a look and I'll sort of see if we get confluence here. The 23 and the 38 are respecting the base and conversion line quite well there, as is the 61.8 here at the Kumo cloud. And you can sort of see how they work in conjunction with one another, but that's for a lesson for another time. So back to the daily time frames, that's how you would draw your Fibonacci in an uptrend. As I said, we're still in this overall downtrend, but indeed for this time frame here at least, we were in an uptrend, and we're looking for confirmation if we're going to sustain that uptrend by bouncing potentially off the 38, the 50, or the 61 to make a new higher high. So let's have a look at a couple of examples where we could use the Fibonacci, and where we did in UTG with quite incredible success, where you could have just used the Fib tool by itself to ride this entire move on BTC from about June, late June. Let's have a look. So we're in a downtrend here. We were in an uptrend, obviously, but we had this pin bar-like candle. It doesn't respect the elements of a pin bar, but certainly there was quite a large daily candle here with a bit of a sell-off, and then this very severe bearish candle. So we had information on our charts at that point to about, I want to say it was about the middle of July, I dare say, because we had just made, or not long made, this bottom that we were quite confident was going to be the bottom at that point. We were confident of that. So we thought we've had a pretty good bounce off of there. So we could have drawn our fibs from here. I'm going to draw it all the way across just to show you how it plays out. And we can see how well that was respected at that time before any further information was displayed on the screen. We respected the 78. We respected the 61 very well there. The 50 was respected before this quite severe drop. 38 was well respected, and we're teetering around the 38 now. So remember a moment ago how I was talking about the 27 and the 61 sort of extension levels, I guess you would call those to a degree. They don't often come up in trading, but when we have a severe break to the downside in this instance, and a strong confirmation that we've broken through that previous swing low, and we're not going to either double or triple bottom or have another bottom here, I start paying attention to this 27 area. And about a month or so in advance, or a few weeks in advance, we were saying once we had a breakthrough here that this was going to be somewhere that we were paying attention to, 7-6, if we were to continue this downwards momentum. And let's see how it played out, just using fibs, mind you. And obviously we've got our volume indicators here as well. So we're coming down now. We pretty much, I guess you would just about call that a double bottom. We've come up. We've hit the 50. 61 is where we'd be looking for next if we break through the 50. We've had a very well-respected 61 rejection there. We've come and consolidated to a degree and teetered between 23 and 38, as I mentioned beforehand. And we've broken to the downside, not too convincingly just yet. The 38, again, becomes another level where we're paying attention. Breaking across. I'm just going to pause it there very quickly. And we can see now that this is quite a severe break below this previous low. So at this point here, where we've also got this daily doji indicating some indecision, this is where we would start paying attention here. I probably said a couple of weeks out beforehand, but it must have been a couple of days where we sort of said this was going to be a very interesting level to look at. And we had said prior to, had we broken through this 9K level, then this was the next level we were looking for. And let's see if we get to that point. Bang, we did. We licked it, kissed that 27 just absolutely beautifully. Mwah, hit it, and then we'll continue on to see what happens from here. And again, and almost again as well. So from here, we were really neither nor, we were not really getting any bullish or bearish indication at this point from here to here. We've almost got what looks like a morning star formation, but then we had this very decisive bullish momentum, and everyone was starting to get very excited again. And then we had again this sort of pin bar formation, or this pin bar candle rather. And sure enough, that indicated more bearish momentum. So from there, at this point, these fibs really become invalid. I don't like to drag things all the way across to get too concerned about where it's going to roll. From there, did we hit the 61? No, we didn't. I've not really seen instances like that where the 61 is hit and respected like that. But for the sake of it, let's go across and see how long it would have taken to get there. And we haven't quite gotten there yet as to where we are now. So that's interesting. I've not really looked at that. So from there, this would really become my new swing high for this period because we had a pretty major pivot there. And I don't often do this, but it would be interesting to see how this played out. The reason why I did this is because this was so well respected. There was undeniable evidence there that the fibs at this current time point were being very well respected. We saw an almost exact to the sat rejection of the 61 just here. So that's why I paid attention to it. But often I would not use fibs on such a long length of time because it often becomes a lot of noise in that time period. And if I'm trading smaller time frames like the 4 hour, I want more immediate information. I don't really want to be looking at this huge, big macro overview of the market. Oops. So yeah, I guess to a degree, this has been quite well respected. The 38 has been respected there as well. We've almost, I guess, kind of had a similar sort of double bottom as we did here. And And the 50's been respected there. So yeah, I guess you could put a little bit of weight on that if you wanted to. That's not really part of my trading strategy, so I wouldn't put too much weight on this, to be honest. If it were a double bottom, we'd be looking for a neckline support around here. But again, I'm not too interested in that. I'd much rather play this shorter bit of information. So I've got more immediate information about whether I place a long position here at the 38 and the 7.6, or do I indeed continue shorting this as we have from 8.450. We ran it down to 7.8. We bumped it back up to 8.1, and we've been short since 8.1 from yesterday. And we're looking now, do we close our short at the 7.6 area, or do we keep riding it down to the 7.451? So there's a few different tactics that we would use in conjunction with Fibonacci, not just looking at Fibonacci. What are our indicators saying? For myself, what is the Ichimoku saying as well? And what are my levels of support and resistance, or in this case, supply and demand, telling me as to where we might head? Are we in fact even heading down towards this sort of 7.1 area? Time will tell. So that's how I use Fibonacci. I encourage you to go over to unitytradinggroup.com/Fibonacci to read more about our guide, to give you a little bit more in-depth information about placing stop losses and take profit areas as well. I do want to keep this video short. And if you are seeing us for the first time, thank you very much. We highly encourage you to come over and check out our Discord and ask all the questions that you'd like. There's tons of information like this, as there is on our website too. And we'd love to answer any questions that you might have. Look forward to sharing more information and guides with you in 2020. Have a great day and see you soon.